Welcome to Money Making Sense, the show that if money affects your life in any way whatsoever, we're going to talk about it. This is the last of our 10 tax tips series, and we've saved the best for last. I've got Aaron Abendroth joining me. How are you?
Good. How are you doing?
Good. Now, you're with Haynie and Company. Is that correct? So if anybody needs to find you, they're going to come stalk you at Haynie and Company.
They can.
Okay, great. So you are here to talk to us about how do we deal with any retirement that we have, retirement savings, or what if I've cashed in? What if I'm, getting in on my IRA monies? How do I deal with that on my taxes?
Well, there's several ways that you need to take into account your retirement. If you're looking to contribute to your retirement for 2018, you still have time. You have time until April 15th to make that contribution. Now, the contribution can be up to $5,500 if you are below 50. If you are above 50, $6,500 for an individual retirement account.
But not my 401k.
No.
If I want to give more money to my 401k for 2018, it's too late.
You're out of luck, unfortunately.
So why just IRA? Why does the IRS give us 4 extra months essentially to put more money in on an IRA for 2018 when we're already in 2019?
Well, that's been written into the provisions, and Congress really wanted to have a lot of flexibility for people to continue to contribute to their retirement because they did not know where their taxable income was going to be for the prior year.
I see. So especially maybe if I'm self-employed and I just didn't know how much money I was going to bring in, so I wasn't putting any money into it, and then I go to file my taxes and I realize, oh, I've got quite a bit more than I thought, or maybe I'm going to get a refund back, and I think I can put that refund toward an IRA.
That's correct.
Up to a certain amount.
Up to $5,500 for 2018. If you're over 50, you can do $6,500.
Okay. Are they going to change those amounts for 2019?
There is some movement in 2019. I'll be honest with you, I'm working on 2018, so I don't know that amount, but generally there is scheduled increases in the IRA contributions.
So I know we have new tax laws this year that everybody's dealing with. Is that increase in your IRA contributions, is that part of that change, or this is just a regularly scheduled up on the amount?
It's a regularly scheduled increase, generally.
But we're still talking about 2018. So let's say I'm sitting down, I'm filing my taxes with you, and I find out, oh, hey, I've got a little bit more money than I thought. So far, I've only contributed $3,000 to my IRA, and you say, hey, let's just throw in that extra $2,500 to get me to my max. But let's say I have $5,000 total. $2,500 of it can go toward 2018's taxes, but I could right away put another $2,500 for 2019's IRA account?
You definitely can.
Oh, okay. So I don't have to wait until I go to file my taxes.
And if you're looking at a lot of the investment strategies out there, if you're doing consistent contributions throughout the year, you're going to be further ahead economically.
What other retirement plans can I write off on my or hope to help with my tax refund or lower the tax burden I would have to pay?
There are a lot of different options out there. A lot of times it's almost like alphabet soup. We can say in the IRA, there's a SEP IRA, which is a self-employed individual retirement plan. There's also a simple IRA and then there's also 401ks that some of those different options are provided by the employer. Some are set only for an individual. The IRAs are essentially for individuals, and it's a great way for people to invest. But then in addition, what What does happen is that you can even participate with an employer program, but also have an IRA contribution.
But how does that help me on my taxes? Like, am I going to get a dividend back on my taxes from this, or how does that
No.
work?
What generally happens is that you're able to get a deduction. It depends upon your individual situation, but you get a deduction that will lower your taxable income and thus your tax bill.
Has that changed for this year? Because I know there's that whole new tax law, and so many of our deductions just went away. They're like, they're gone. Is that the same with the retirement deductions?
No, actually, the retirement deductions are above the line, what they say are above the line items, before you actually come to your itemized deductions or the standard deductions. So you're able to actually get that benefit before the calculation of tax. So that, thank goodness, did not disappear.
Okay.
So.
All right. So let's go to the scenario. I'm 68, 69 years old. I no longer am working. I don't have an income coming in. So now I have to break into that IRA or my 401k. How does that affect my taxes?
Well, when you take money out of retirement, generally, you are going to be taxed on the distribution, the amount that you're taking out.
Okay.
And however, if you're taking money from a Roth IRA, you have already paid the tax on that. So you're not receiving any taxable income from a distribution from a Roth IRA.
So that's something to think about if I am filing my taxes this year and I do have this little bit of money and my accountant says, hey, let's get this into an IRA. I might want to put it into a Roth IRA right away. The taxes will come out right off. I put the rest of that into the IRA. And then 20 years from now, when I need to pull it out, I don't pay any taxes on it at all.
That's correct.
Oh, we like that.
Yeah.
Because we never know where the taxes are going to go up or down. Most likely up.
And a lot of times what I tell people, it's a bit of a gamble one way or the other. You're gambling that the tax rate, if you want to make a contribution to a Roth IRA, you're gambling that the tax rate is going to not be any higher than it is. And as a result, you're going to have that money grow tax-free, and when you take it out that way. Whereas with a traditional IRA, you're gambling, hey, the tax rate now, I'm going to get a deduction now, and when I take it out, the tax rate in the future is going to be lower.
Okay. All right. Anything else we need to worry about, like with retirement, whether I'm trying to put away money for retirement or I'm actually pulling out of my retirement fund for my taxes?
Some things to kind of take a look at. There is one additional feature that you can consider. You can consider doing what's called a backdoor method. And the backdoor method allows you to make a deduction, a contribution to a traditional IRA, and then also recharacterize that to a Roth IRA.
Okay, this sounds like something that you get put in jail doing.
No, I promise. If you go out there and you do a search on backdoor Roth conversions, you will find that.
Okay, so let's say I've for many years I've been putting into a traditional IRA. There's $15,000 in there now, and I just heard about this wonderful thing called a Roth IRA. What do I do to change that traditional into the Roth?
You can actually go through a process of converting that from a traditional IRA to a Roth IRA. You'd recognize the tax at the time of the conversion.
Okay.
But you still can stay in your particular investments at that point.
Okay.
if you want to.
So if I did the entire $15,000, I have to pay tax on the $15,000.
That's correct.
Okay. So that's something to consider if you may not have that much money to give up. Okay.
That's correct.
All right. Any other backdoor methods that,
You know what? The best thing that I could say is that when you're making an investment into your retirement, do it consistently throughout the years. A lot of times people will wait until, I'm getting into my 40s and 50s and I need to make a retirement contribution. The time to start is in your 20s, and you get the benefit of compounding investment income, and over multiple years it creates a nest egg for your retirement. So start early, don't wait.
And it's never too late to start.
No, it is never too late.
So even if you didn't start when you were 20, just start now.
Start now.
Okay, great. Thank you so much, Aaron Abendroth. You are with Haynie and Company. And if you need to find your own certified public accountant, go to uacpa.org to find the best one that's right for you. Also, tune in to KSL News Radio every day. You're going to hear more tax tips throughout this tax season. And again, uacpa.org is the place to go for you.
Thanks for being a Money Making Sense listener. Follow your common sense onto social media. Money Making Sense on Facebook, Twitter, and Instagram.